Joining us now, Sarah Hindley and Bowler, the senior software analyst at Macquarie Group. Sarah, great to have you with us. Azure has always been sort of one of the engines of growth for Microsoft, and what we saw for the quarter was a quarter-on-quarter sequential decline in growth, as well as a number that didn't meet Wall Street estimates. How concerned should one be about this particular line item in sort of the context of Microsoft as a growth story?
Yeah, absolutely. So the first thing I would say, Melissa, is that in many ways, this feels like a little bit of nitpicking. When you take a bigger look at what Microsoft did last night, they, after beating by $5 billion in revenues last quarter at the start of this pandemic, were able to beat by $1.5 billion last night. And so while Azure growth was just in line with how the company guided and didn't put up the kind of upside to expectations that many on the buy side wanted, it feels like we're splitting hairs, because the reality is that this is a business now annualizing at over $20 billion in revenues. And I don't know any businesses growing 50% while doing $20 billion in annual revenues. So this is not something that I believe is going to shake out active long-term money managers, although it may weigh on the stock for traders for several days. Last night was not a thesis breaker. I think Microsoft continued to prove that it is going to be one of the key winners of the new paradigm of work, live, and even play from home, which you certainly saw in their extraordinary gaming results last night.
So the overarching story is intact, but there are still other small misses which may cause investors to question where it's valued right now, given the huge run it's had. So operating margins came in a little bit light. Productivity and business software, that came in a little bit light. And right now, the stock, according to FactSet, is priced at 10.2 price to sales, and that's close to a 5-year high, Sarah. So, at what point should investors step back and say, what am I paying for? So it's priced almost to perfection, so to speak, and yet there are these small misses. And granted, they're small misses, but given the valuation, should investors overlook them?
Well, yeah, I think that the beauty of Microsoft's business model has always been that it is so diversified that when one business is facing very natural problems, which I think, if you look at what Microsoft cited last night as some of their issues, lower advertising spending, which impacted LinkedIn and search results, this is going on across the board. We're seeing this everywhere as GDP is contracting over 20% this quarter. And you also saw lower job postings on LinkedIn as well, and free trial versions of Office 365. But you also saw tremendous strength in other areas of the business. Server and tools products were incredible. Gaming was incredible. And PCs were also very strong with Windows as well. So while it is priced for perfection, the reason the stock is consistently priced for perfection is because it's a machine with many different levers that are operating, not always on all firing at once, but taken as a whole. Again, I can't say this enough. This is a company that grew 13% year over year at $38 billion in quarterly revenues, despite the fact that we are in the worst global pandemic we've seen in 100 years. I actually think it's phenomenal.